All right, so what's in my stock market portfolio? Starting from highest profit to lowest profit. So I've got Groupon at 3.44. I bought it at 2.9. So I got 18%. I'm up 18% on Groupon. But I've got covered calls on Groupon that expired January 18. So I can't do much with the shares, so I have to keep it. Wait until January 18 when the options are expired. And then decide then if I want to sell the shares or keep the shares and then just sell more covered calls again. I think Groupon has potential to go back to $5. So I'd probably keep the shares and just sell covered calls again. But if I wanted to sell Groupon right now, I have the option to buy back the call option that I sold to remove that restriction. And then I'd be able to sell the shares. So I also have Bombardier that I bought at $2. Right now it's at $2.22, so I'm up 11%. This is also a stock that I sold covered calls against. So here's an example of a stock that went above my strike price plus the call premium that I sold. So this is the second month I sell Bombardier call options. First month I think my return was above 5 or 4.5%. This month I believe was also 5%. So I already made 10% from Bombardier, and the strike price I chose for the second month was $2, which was exactly my purchase price. So if these shares get called away, they'd get sold automatically at $2, which is the price I bought it at. So I sold the call option at 13 cents, but right now it's trading at 31 cents because obviously the stock went up. So my strike price was $2 and the call option or the call premium was 13 cents. But the market price is $2.22. So that means the market price went above the strike price plus the call premium. So theoretically, my shares could get called away. My shares could get sold automatically. There's a chance, but it's not guaranteed. But here's an example where market price is above strike price plus call premium, but I still keep the shares. And the reason for that is probably because whoever bought the option at 13 cents is probably selling it at 31 cents instead of buying the shares at $2. So they're making double or triple their investment anyways. So they don't have to buy the shares. So that could be a probable reason. So I've got Google that I bought at $9.95, closing at $10.70. So I'm up 7%, not bad. Got GE that I bought at 7.85, closing at 8.23. I'm up close to 5% on that. And obviously GE I bought 100 shares of so that I can sell covered calls on. And I think GE is also the second time I've sold covered calls. Yeah, so the next one expires February 1st. Collected 42 cents last time. So 42 minus 11 divided by a 785 investment, I believe. Yeah, so about 4% in 1 month. So I could probably keep GE for a long time until it recovers and goes back to what it was previously trading at, maybe 17 or 18 or 20, and just keep selling covered calls every month as much as I can, or for as long as I can, so I could benefit from the capital gain but also extract an income from holding the stock. Got MasterCard that closed at 189. I'm up 4%. Got Amazon closing at 15.75. I'm up 4% as well. Got Qualcomm closing at 56.6. I'm up close to 4%. Got American Airlines, interesting, that I bought at 31 this week. The same day I bought it at 31, it actually reached $28. And then the next day it went all the way up to $32, obviously when the whole market went up. So I'm up 3% on the shares, but I sold covered calls on American Airlines, collecting $1.65 per share. So collecting 165 minus 11 divided by the 3,100 investment, that's close to 5% in 1 month as well. But as you can see, the call premium is already trading at 2.24. So if I had waited and not sold the call option on Thursday and sold it on Friday instead, I could have made much more. Could have probably made close to 8% or 9%. But obviously I didn't know that it was going to go up the next day. In fact, the same day it dropped to 28, so I would have panicked and I would have been disappointed for not taking whatever I can take, like the 165. I've got CI Financial Corp that I bought at 17, closing at 17.34. So I'm up 2% on that. I also sold covered calls on that. Sold them for 80 cents. So 80 minus 11 divided by a $1,700 investment. That's 4% in 1 month as well. I've got Snapchat that I bought at 5.84, closing at 5.95. This is a stock that I'll be holding long term, probably trying to sell at $12 or $13 because it's still a fresh stock, so it's got a lot of movement. I'm not even sure if it's making profit right now, if the company's profitable. And I'm up 2%. But I sold call options against it, a 2-year period, though not a monthly call option. I sold the 2-year expiry date. So I got from it 1.89 times 200 shares. So I got $378 minus $12 fees. So $366 divided by my investment in Snapchat, which is $11.68. So I got a 31% return, but covering 2 years. So it's about 15% per year. But I'm actually hoping that my shares get called away sooner. I took a $7 strike price. So I was hoping that between now and 2 years, or in the next 2 years, I was hoping that Snapchat goes past $7 plus the call premium. So I'm hoping that Snapchat goes past $8.90 and my shares get called away at $7. So I would have made a profit, a capital gain of 7 minus 5.85 plus the 31% from the call premium that I sold. But if that doesn't happen, well, I made 15% per year, which is not bad, of course, on that investment. And we'll just sell Snapchat whenever it reaches $12 or $13 again. Got TransCanada Corp that I bought at 51, closing at 51.54. This was actually trading at 55 at some point, but of course not anymore. So I'm up 1%, but this stock pays dividends, so not worried about it. I can be patient with this stock. Got Barclays, I bought 200 shares at $8, closing at 7.88, so I'm down 1.5%, but of course I'm selling covered calls on it. So last time I sold them were at 20 cents, and I believe it's the second time as well. So 20 cents last time at an $8 strike price. So that's 20 times 200 shares minus $12 of fees. So $28 that I collected on a $1,600 investment, which is 1.7% per month. So that's not as great as the others, but it's still a decent annualized return of 21%. Bought JP Morgan Chase at 103. It actually went even lower to probably low 90s, but it closed at 100 on Friday. I'm down 2%. Got BMO that I bought at 93, closing at 90. I'm down 3%. ExxonMobil that I bought at 75, closing at 71. This was actually trading at 64 at some point. Anyways, closing at I'm down 5%, and this one pays good dividends. Got Blackstone as well that I bought at 32, closing at 30, so I'm down 5%. This also pays good dividends, around 7%. Got Vermilion Energy that I bought at 32.5, closing at 30. I'm down 5%. This also pays good dividends. Got United States Steel that I bought at 21.81, closing at 20.3. I'm down 6%. Got Dollarama that I bought at 35, closing at 31. I'm down 9%. Got Beautiful Craft Heinz that I just keep buying too high. I bought it at 50, closing at 44.49. I'm down 11%. Nvidia that I bought at 163, closing at 136. I'm down 16%. I'm thinking of buying more Nvidia. Nvidia and Apple, I want to buy some more of. Apple had an order at 142, and I just missed it by, I think, half a cent. I think I missed it by half a cent. And I'm down 17% on Apple. So my average price for Apple is 179, but I definitely want to buy some more at 142. So TFSA, I'm down everywhere. AT&T down 5%, Facebook down 18%, and Ford down 26%. But I'm selling call options on Ford. RSP as well, down everywhere, but most of them pay me dividends. But yeah, down. AltaGas, Facebook down 1% here. General Mills down close to 3%. Bank of Nova Scotia down 4.5%. This is a Bank of Nova Scotia I'd want to buy more of. Basically, any Canadian bank stock I want to buy pays dividends and obviously very safe. But around the $66, $65, I'd want to buy more. I also want to buy some CIBC. Honda Motor, I'm down 6%, pays dividends. Ford, I'm down 10%, pays very good dividends. Ford, actually. And I'm selling covered calls as well on Ford. Vodafone, I'm down 12%. Alibaba, I'm down 14%. FTN.to, I don't want to talk about it. It's very frustrates me because I wanted to buy this at $3 when it was trading at 3.5, and I really wanted to buy more of it at 3.5. I was even thinking of selling a bunch of losing positions just to buy FTN at 3, because I know that eventually in 1 year it's going to be trading at $9 or $10 plus the dividends. And instead it just shot up to, as you can see, it closed at 5.8. So I feel like I missed out on the opportunity of buying it at $3. And I'm down 21% because I bought it at 7.4 before, of course, it dropped to 3.5. And the F.TO from the same company, bought at 4.5, closing at 3.5, so I'm down 22%. But these last two are mutual funds that hopefully will start paying out dividends, and when they do, it'll be at a very good yield. DFN pays dividends, and right now it's about, in my case, because I bought it at $8, it's about 15% per year. FTN, when they start paying dividends again, it'll be around 20%, I believe, for me. Either 20 or 24%, I don't remember. Actually, can calculate it right now. They pay 12.5 cents per month, divided by my purchase price of 7.4 times 12. Yeah, so it's about 20% yield once they start paying out dividends. And this one here, the F.TO, I think will be around 28% yield once they start paying out dividends. But they're not very consistent on this one. So this one might be a little bit risky. I wouldn't buy more of. Alright, so if you have any questions, leave them in the comments below. If you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get between $25 and $250 back, depending on your deposit. And check out the links in the description below the video to help support the channel. Thanks for watching.